All right, we are live with Jeff Macke, the man himself. Mr. Macke, let's talk some retail. You ready? We got some stuff going on.
I am always ready, Spencer. Nice to see you.
All right, let's do it. Let's start with Starbucks. All right. So this is a
Yeah.
post a stock you already read the stock this morning in a post out to your list. If you did not get Jeff's email, you can use the links below. Check it out. This is a company that you like. You have strong feelings about them, and
Well,
yet,
like them.
yeah,
Yeah.
I like
And
them
yet,
too. What you said it's running out of steam. Very nice coffee pun there, sir.
thank you. Thank you. It might be a little latte for Starbucks to get long
Hey,
here. No, I'm hiding my hollow mood, Spencer, because I've been looking over the quarter, kind of what's to come and the progress on Nickel. I like to give CEOs about a year. And Nickel was announced as CEO shortly after the last guy turned in a quarter so atrocious that it almost immediately got him fired. So they announced Brian Nickel. He's been there for about 4 quarters. That's normally kind of about the honeymoon period. You can argue that he'd get another earnings time, but maybe not. Just kind of looking over the company, I was hoping for more tangible results on this. And I'm not sure if I underestimated just how much damage the last CEOs had kind of done to the brand by stripping out all the comfort aspects of it. And I do think Nickel's doing the right things. It's just a 40,000 unit chain. It's going to be hard to turn it, and we're not really seeing. They're still kind of in expense control mode. I'm not excited about this, even with Pumpkin Spice Day coming up on August 26th this year, which is exciting. Official start of the holidays, as you know. So that's nice. I like that about it, but you end up with a stock that's 40 times earnings. The E is probably still going lower. Sometimes they don't turn around. I mean, it's just really hard to kind of turn something that's been this moribund for so long. He's going to need more than I think he's got on the number next week.
did you just say that the pumpkin spice latte comes back on August 26th?
August 26th. That's like coming out with clam chowder just in time for the hottest days of summer. It's a weird call. It's pumpkin spice shouldn't be. It's all just kind of nasty. I don't like pumpkins anyway, so maybe I'm biased. But yeah,
All right.
it's fall. It's fall this year on August 26th. It
Okay.
might be fall for Starbucks shares.
Well, they also report earnings next week, so we should hopefully, I mean, get some clarity. At the very least, get an update, right? That's what's going to happen. But are your
Yep.
expectations high? It seems like they're pretty low heading into this report.
They're pretty low heading into the report. Analysts are looking for negative comps in the U.S. I don't think they can pull off positive comps, and that's what I need to see out of them. I need to see that they're winning customers back, and if they're able to do that, that's great. The comps they're up against literally got the last guy fired. So I would hope that maybe you could do better than the guy who got fired for posting these exact same numbers, but we're still looking for a decline. Starbucks is charging a little more for their coffee. Again, the food's gotten better, the experience has gotten better, but people are just a little bitter. Another coffee pun for you, Spencer, just because they keep rolling. So folks are bitter about the experience they had before, and they're not that fired up. In a world of bros growing comps at 7-8%, I just can't justify being long these guys with negative results.
I mean, look, the good news is in the short term, it's like most stocks, Starbucks is working, right? Pretty much everything is up
Yep.
since April and May. So, it's working in the short term. But if you just zoom out on the chart, you go back to 20, 19, 20, it's really been in this $100 zone quite a lot, actually.
Quite a long time.
Yeah.
And normally you'd be like all coiled spring, and I can see, if you wanted to make your coffee cup half full, you could easily kind of make the case. But you need better earnings. You just need better numbers. I didn't make the rules. The story has to include phrases like growing comps and people falling in love with the coffee experience again. They could say a lot of things, but they're not going to be able to. They really did a lot of damage to the brand, and it might just be a thing like rom-coms used to be a thing that we would watch and everyone would gather and there'd be a meet cute and they'd get together at the end. Maybe that is where we hang out in coffee shops all day, because Starbucks has really made a concerted effort to win people back, to get them kind of sitting around and just journaling in their little online blogs or whatever you will, writing their scripts, their screenplays, and hanging out in a Starbucks. But they ran those customers out a few years ago, and I'm not sure they're coming back.
All right, we'll find out more next Tuesday when the company reports. Let's talk about a little bit more of an exciting stock. What the hell happened to Kohl's this morning? I was watching it. We were on a show doing a thing,
Right?
and I looked and I saw Kohl's up 50%, and I had the same thought most people had, which is, oh, they probably got taken over just now because this is
No,
a company that has had takeover interest in the past from private equity, several different suitors, if memory serves, and I just assumed, oh, that's what this is. Turns out that's not what happened.
I know, it's. I think there were a few folks leaning a little short onto this one, Spencer, and this is the kind of market we're in. This is the kind of drink that you want to sell. Basically, if it's Kohl's, if it's Starbucks, if it's anything, your inclination to be to sell. Instead, what people have been doing the entire way down, and this is a chain that was $80 in 2019, so you've had plenty of time to cover your short. And you don't necessarily need to short them until their cold dead body releases its grip on the NFC Central. I don't like Green Bay, and I'm not crazy about Wisconsin in general. But I mean, it's a 45% short base. So you get this started. I think there are some rumors out there. Somebody came out and paid almost $20 a share for Kohl's, which is just nuts. That money might go to money heaven, but if they had some behind it on the long side, it's probably paying off. I mean, it's whatever they got the animal spirits of churning. I kind of thought it would be gone by now, like the huge rally. But man, they're when you see a 45% short base, and people love to kind of bag on shorts. There's nothing that gets folks more excited than a good short squeezing. And that's kind of, I suspect, what's happening. Maybe they get bought. It's a $1.5 billion company. There's nothing exciting happening at Kohl's right now, near as I can tell. I don't go to a ton of Kohl's, but yeah, seems like a squeeze. I mean, and if you look at
I've
it,
always liked Kohl's. This is the best day for the stock since we were in the throes of COVID, Jeff.
that's
It's
exciting
been
stuff.
5 years.
These are good memories. I kind of vaguely smell mold every time I see the name Kohl's, just because the store base is not quite what you'd want. These are the guys, remember, Spencer, they were going to be Amazon's return center, because
That's
you
right.
always see the best retailers at the post office. And, when you're going to return things, well, hey, let's go to Kohl's and we'll probably buy stuff too. They did that in the entire chain. They didn't even test it. It was a moment of absolute pure insanity. And then they, not as insane as turning down an offer at 82. If you look at the long-term chart, it's a nice day for Kohl's today. It's nice. We all miss COVID. I miss COVID. I'm a sentimental guy. The kids were at home all the time. It was nice to see them. A lot of family time during COVID. We all miss it a little bit. And it's nice to think that this is the best day since COVID, but in the long term, Kohl's is now only down 87% or something like
All right.
that for 5 years.
To your point, the all-time high was 83, I think. And this morning before, or even just a few months ago, the stock was at 6. So if you are still short a stock that has gone from 83 to 6, just to figure that out here, that's a 92, almost 93% drawdown. Um, what are you doing? So you point out here
Yeah,
in this chart a 45% short interest. 45% of the float is currently sold short. Uh, what are you doing, guys? I mean, the thing
control
is
your risk.
already it's already crashed.
And there was some liquidity risk, and that is the most bullish interpretation you can possibly give this if you want to, just have anything other than it's like a Reddit guy talking about how it's going to be a squeeze. But like, yeah, you're exactly right. There's a liquidity risk, and maybe they paid off the debt agreement, maybe they got some sort of extension. You still end up with Kohl's, but even at that, these things can drag on for a million years. There's still Toys R Us's out there. GameStop is still actually a retailer for some reason. This crap can last forever. You don't have to stay short. Control your risk. And my God, 45% short, like you say. I think we see that it's down. I don't think they're going to miss to the downside. Expectations are low there on a fundamental basis.
It's funny, so you see Kohl's pop this morning, and your first thought is to look at the other department stores. There aren't many of them left that are publicly traded, but Macy's had a pop, Best Buy had a pop. I'm sure there may have been one or two others, but like I said, there really aren't that many that are still on the board. So it was kind of interesting to see that happen this morning, and I mean, Best Buy is holding those gains. Macy's holding those gains, some of them at least. But
You know,
uh,
it's
we'll see.
there's some animal spirits out there.
Yeah.
We're seeing some. There's
Hey,
a few crazy things going on,
hey,
and
bull
ours is
market. This is what happens in the bull
yeah,
market, right?
exactly. Hey, the
All
trends
right.
are buddy for sure. Some of it makes sense. The stuff I'm long, surprisingly, is just it's finally being realized in terms of the fundamental value that they are. The rest of this crap looks like a bubble.
That is a certifiable downtrend, right? That's what that is. Let's move on. Let's
Yep.
talk about Lululemon. When last we spoke about this company and stock, it was a few weeks back, maybe a month ago. They were suing Costco because apparently you're not allowed to sell cheaper versions of athleisure in your stores.
You know,
Anyway,
I
what's going
actually
on
looked
here?
at that lawsuit, and it was the most bearish thing. The idea, and you can in fact patent certain patterns and things that they're non-functional. I mean, it's that's a real thing. But the entire contention of the lawsuit is they're claiming people are going to get confused between the product that's selling at Lulu for $150 and stuff they bought at Costco at $12. Now, that normally is not the kind of thing you want to draw a ton of attention to. Like that's a fight that maybe you take that one to the marketplace and win with your surprisingly high priced athleisure apparel. It's that Lulu's not going to win that trial. They're not going to realize any damages. They're not even suing. They're suing Costco. They're not going after the people making it. It's really kind of a showpiece trial to demonstrate that they're willing to defend their brand. They got bigger problems than that, man. They aren't even sniffing the problems that they have. They think it's a macroeconomic problem, and it's not. It's a Lulu problem.
This is a stock that from 2017 to 2020, well, I guess really even 23, the stock went from basically in the high 70s to $500, right?
It was a glorious launch. It
Just
was
a
just incredible.
glorious trend. We are now in a more than 50%. You wrote it, you say here, 56% drawdown on this stock.
Yeah, that's a
No,
10-year chart. Those are all the drawdowns in Lulu. So you can see this is the biggest pullback it's had in well over a decade. It's a strange time to downgrade it. Kohl was kind of a classic. Boy, we should have sold this a year ago type of call. But
not that I really care, but who was the downgrade this morning?
it was J.P. Morgan, I believe.
Oh, that actually, see, you know, I not all ratings are created equal. I think a rating from Goldman Sachs and JP Morgan maybe hold a little more weight. JP Morgan is the largest bank in the country. So I think that's interesting. JP Morgan, that's a big name. It's not some
No,
random
yeah,
niche shop.
yeah, nope, and a good analyst, and it's not entirely. This is a little bit like the guys that were still kind of piling in Coles. It feels like maybe this would normally mark a bottom for Lulu. It might kind of just be an inflection point, but sometimes you're better off selling late than never. And I think that's the bet being made here is that Lulu's going to kind of follow more of a pattern along the lines of, like, I guess, along the lines of historical specialty retail. I always say it's the place that love goes to die. I was long Lulu. Nobody loved Lulu more than me, man. This was a first pant that you could wear, Spencer, on a hot summer day in Manhattan and not be just like steaming rice in the crotch of your pants. Men used to have to wear denim or wool. Those were the two fabric choices. Athleisure saved us. It's much more comfortable, but you know what? Everyone else is doing it now. So Lulu kind of had its run. It had its day in the sun, and now you're left with, just like Starbucks, a 40-something times earnings name that is growing not at all. They like Starbucks have negative comps.
It was a glorious run.
Oh
Okay,
God, it
well,
was the best.
you mentioned here's that Lulu. So yeah, just
Yeah, I mean, you could at any point you could have downgraded us, but as you can see, that doesn't look like a super bottoming pattern. That doesn't look like it's coiled
no,
spring
it
there.
looks like it looks like it's still going down, actually.
It looks dark indeed, which is why I bought up Guest, because that is the normal pattern of things. Perfectly good retailers, and this is a success story. There's plenty of them that just disappear entirely. But this is Guest. This is a 30-year chart, 30 freaking years. The lovely Claudia Schiffer. If we'd like to talk models and Guest, this is iconic stuff, Spencer. That's my point. This was Generation X. This was kind of hot, young, sexy as a brand. It peaked at 55 in 2007, and it just has kind of done nothing but slide slowly, inexorably down. It's lost about 2/3 of its value. And this is really kind of a good outcome. It's not a sector where you want to, again, they're better than dead.
This is a good outcome. You're not dead. This is great.
I mean, the best outcome is like an Abercrombie pitch. I should have pulled up the chart, but that was hot once and then became hot again 15 years later. But that really almost never happens. And so this long dead pattern, this is about as good as you're going to get. There's a nice picture of Claudia Schiffer and about 60% of your money going to money heaven when you start buying these specialty. And I think that's the bet being made. It's at JP Morgan, not to be too harsh or anything, because again, it's not so bad to be alive still 20 years after your top. It's just a little bit of a slog if you're trying to make money.
So what you're saying is when it comes to retail, it's really not unlike any other business. It's just your best bet more often than not is just the big get bigger and everyone else sort of eventually falls by the wayside.
You got to just, you got to pick your spots and you're never going to, you never get that hot back. You don't get that heat back. Lulu's never going to be as absolutely iconic and incredible as it was when they were just slinging unbelievable numbers of fanny packs and making 65, 70% margins on their stuff. Those things are not coming back. And there's still a company that regards themselves as a full price type of outfit where they don't do discounts. Guess used to think of itself the same way. Holy crap, we've got this fabric denim and we've got this great looking model and we put her in black and white and it's the hottest thing you've ever seen. Well, that turned out not to really be a sustainable story. And so they consolidate. And this has been 25 odd years for Guess. I'm not saying Lulu can't spike from here. I'm saying they have problems they haven't started to address. And so the downgrade, like you say, they're not all created equal. This is a good analyst at a good shop who's a credible guy. And he's simply saying that, listen, the earnings aren't there yet. The turnaround isn't there. They have more clearance than they did before. And there's not really evidence that they're about to get it back. Vuori and Aloe haven't even gone public yet. And they're taking a huge amount of share from Lulu, which is kind of crazy. It's, you don't want to be short, like just go away. It's okay just to walk away from these things. You have your fun with Claudia. You'll always have Paris. And you just move on with your life, which is kind of what I think you should do with Lulu.
The beautiful thing about retail is there's always going to be a new wave. So if you're looking for your Guess circa 2004, your Lululemon circa 2017, this guy that I'm talking to, he knows what's what. He knows the hot brands as they're coming up. He doesn't talk about them he doesn't buy them way after the fact, like anybody buying Lululemon or Guess today. So if you want to get Jeff's picks, his favorite retailers to buy, to own, the ones that he owns, join his retail roundup. The link is below in the description. We got to get that on the screen. Do we have an on-screen graphic? Can we get an on-screen graphic that says join Mackey's retail roundup or something like that? Because
nice little promotion.
He's putting out picks not every week, but he's doing analysis and his portfolio is there and you can see what he owns, see what he's buying. He's made a new buy last week. I'm not going to say what it is, but it's
doing well. Don't tell anyone I bought Kohl, Spencer. I'm kidding. I didn't really buy Kohl.
I certainly hope not. Anyway, we will look forward to your next weekly portfolio review, which you do every single Thursday. You're doing a town hall for your members tomorrow. We'll see you for that. Everyone else, we will see you next week. Thanks for watching.